Greetings, that's Dr. Jeffrey Scott. This is my Market MRI Pro update for the markets of November 19th, 2025. It's already after midnight back in the US. It's almost lunchtime here in India, where I'm doing this broadcast from. I thought it was an important one, so I'm going to go ahead and do it, even though I'm on vacation, sort of. I title this one, NVDA pulls off a triple play. Will it be enough to rescue the markets? So in baseball, triple play is a rare thing. It's pretty awesome. If you're in the team that's in the field, the other team looks like they're going to score, put up the world of hurt, and then one ball's hit and you get 3 outs with one play, and it's the end. It rescued the team. Well, triple play to me in earnings is something I got from Bespoke, who actually publishes a list during earnings season. But a triple play is you beat on revenue, you beat on earnings, and you got it higher. And NVIDIA, I think, got it higher even on margin. So I guess seeing the NVIDIA CEO going around conferences and talking about how great life is probably should have been a signal that NVIDIA was going to have kick-ass earnings, and they did. So is it enough? Again, my name is Jeffrey Scott. My email is marketmripro@gmail.com. Google group a top-down trader, and marketmripro.com is my website. This is for educational purposes only. Anything I mention should be taken in the spirit of education, not investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how I apply them. I have tools and trade stations. Trading View. I have a freestanding app. I have some product and wealth charts, and so happy to announce that I now have a tool set in Metastock. If you are somebody new who's found out about me from the Metastock and recently joined the group, welcome and hope you can learn something. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky and you should consult with your financial advisor before making trades. I have tools in multiple platforms. Each one has its advantages. Which is my favorite is like asking which is my favorite grandkid. And if I had one, I would never tell you on the grandkids, but I don't. So I like to use all of them. And during these videos, I'm going to start to incorporate beyond just the Market MRI Pro app. My Google group is called Top Down Trader. Why do you want to join? Because that's how I contact people. It's the closest thing that I have to a mailing list. You can always quit if you don't like, if you feel you're being bombarded, which you won't. Just go to Google Groups, go to all groups, then look for my Top Down Trader and let us know how you want to be contacted. No, we didn't get another Hindenburg, but I leave this here to remind us that we are in the midst of a post-cluster of Hindenburg's period of time. And when I look at history going back, this is only going back to 2018, the biggest sell-offs occur after a cluster. We have had a cluster, and therefore I think you have to be concerned. And when you look at periods of time when the S&P 500 has had a Hindenburg omen, you can look at the average return 1 to so many weeks out that up to 6 months you're still over a third of the time. Only 37% of the time are you up, although you've recovered most of the losses, only down 1.43%. So you don't expect a big rip-roaring bull market after a bunch of Hindenburg omens. One of the things that I do to help track where we are and what the risk is of this market rolling over, we called it the E index and the E days. Since Praveen built this product, I called it the Praveen index. But basically, this is an index of leaders that we chose at a live meeting in June to try and understand what the market was doing. And this index will typically roll over before the market does. And like the market, it's bent but not broken. It's not broken below the 50, which is sort of the line in the sand. News and earnings, I think we all were waiting for the NVIDIA. It was good. I think Palo Alto's trading down a little bit, but if you look across the tech space and the providers of data center space, I think the NVIDIA is going to boost them at least for the open of the market. We'll see where we end up. Thursday, we got big ones. We got Walmart, big one. I actually have a position and I held on to it because it's got some profits in it. And I have a cushion gap in the afternoon. Then Friday, things slow down a bit. It is judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So if you have any questions about my style of trading, what I do, what I mention, If you disagree, if you agree, and you don't want to put it in the remarks section in YouTube, email me at marketingmripro@gmail.com. I'll personally respond. If you have any of my products, especially Market MRI Pro, and you need customer support, coding at marketingmripro.com will get you to Praveen. Consider joining my Google group and visit the website. It's under construction, but we hope to bring more and more value to the website. And lastly, if you're new to the video, please click subscribe, hit the alarm so you get notified when I do this. Even better yet, come to the top down group where I send out an email with a link in it every night when I do the videos when I'm not traveling. And hit thumbs up, help me get some notice by YouTube so they disseminate to more people. I'm hoping to do a training program in June in California, and definitely will do one at the back half of the year, probably late October, early November in Florida. Onto the charts. So, you know, was this a great day or not on Wednesday before NVIDIA? I'm going to go with the not column. Yes, the indices looked better. The dollar was up 0.64, not an index, obviously, at the high of the range. The Qs were up 0.6, the Spider up 0.39, the Diamonds 0.09, and the Russell was mostly flat, all in the middle of their trading range. The VIX, the volatility was down 1.87%, and boy, is Bitcoin getting hammered, down another 3.67. Now, then I looked at the few positions I have that are not protected with puts or in cash, and I go, it doesn't look like a strong day in the markets. What's going on? Well, if you look at the new highs minus new lows, we still have many more new lows than new highs at 52 weeks on both the NYSE and the NASDAQ. And if you look at participation, excuse my vernacular or word, it sucked. Only 42% of the S&P 1500 were up, 36% of the NASDAQ was up, and 39% of the NYSE is up. I know that even when I'm more invested, nothing pisses me off more than to have a day when the market in general is up and I don't make any money. Well, the broader market was down. If we look at the S&P 500, technology was up 0.69, financials up 0.35, industrials up 0.23, and somehow it didn't. This is from the open, my bad. 0.7 for technology, financials 0.37, so about the same as I said. Industrials 0.3 and materials 0.26. The laggards were energy, utilities, real estate, and staples. That's what you want to lag. You want them to lag because outside of energy, which has its own volatility, those all represent the defensive plays. And if this market's going to rally, we're going to have to come out of the defensive plays. If you look at categories that we're working, again, consistent with the data center theme, uranium, you got to power them. The nuclear space has been hot because of that. Copper, semiconductors, silver, lithium, gold, metals and mining, covered call index. That's a weird one. And what were the big losers? If we look at it, cannabis, again, if you've been on this before, I ignore that. The stocks are cheapy and extremely volatile, and frankly, to me, relatively meaningless. But video games was weak. Norway, which is sort of a commodity based, and of course, don't forget Ozempic, consumer discretionary, cloud, blockchain, Chinese web, solar. So kind of things that have had strength. So don't like seeing those bringing up the bottom. We go to my timing model. Now, the one reason to potentially be on the bullish side is that we have maintained at least on 3 of the indexes. We're still in a buy on the weekly. And technically, even though we closed below the WMA on Wednesday, and even though the bongo has turned red across the board, the only one that is leaning into a bearish positioning on the weekly is the Russell. And if we close higher for the week than we are right now, you'll lose the red. So I don't count that until the week ends. But the daily, as one might expect, is broken down considerably. And you could see the WMA has been massively pierced. And it's interesting, this 30 period WMA and the 21-day EMA, which certain sites and the folks at IBD specifically really talk about a lot at IBD Live, has been broken convincingly, and we remain in sell signals on each of the daily. So right now we remain in a pullback in an uptrend, but I would say NVIDIA influence on the markets, that uptrend is at least under pressure. And, I will go and look at market search and look at the volume. I forgot to sign in. Let me sign in real quick. See if I have recognize my finger. Sometimes it does, and sometimes it doesn't. All right, there we go. And this is one of my favorite web-based tools. I use the volume because I've been using it for a decade. It was called MarketSmith. When they sold to Dow Jones, I think the O'Neill family kept certain rights. And you could see here the volume was light on the NASDAQ and NYSE. It's kind of average, but really minimally, minimally lower than average. And, they're basically saying 50-50 exposure. Again, pullback to me under pressure. And so volume wasn't a big story. If we go and we look at the US index ETFs, and for those that are new to my channel, I will always spend a lot of time on the markets are so important to me because I'm a top-down guy and really it impacts my aggressiveness in the market. So I'll be lighter than I'd like to be considering what the futures are doing just because I've raised a lot of cash. But just because the futures are up and just because there's an enthusiasm, it doesn't mean it's going to last. Hope it does, because I'd rather turn bullish. So here's a big move off the bottom of the spiders. At some point you're going to pull back, and we're consolidating under the 50. It seems like that downward momentum has slowed. We are in a period of seasonality by looking to the right, which is probably positive here going into the end of the year, which can make you feel good. And, this is an interesting candle. It tried going higher, perhaps some resistance of the 50, closed higher than the open, and it was up on the day 0.4%. So do I feel better? Yes. Do I think we're done going down? I can't tell you. Does this count as an attempt to rally day is a question. And that's possible. It is an attempt to rally. Didn't rally much. That's a term if you look at things like the O'Neill follow-through days, but you can't see the follow-through from 4 to 7 days. I think we're likely to see that Thursday is the attempt to rally day. Qs look very much the same, failed at the 50, which isn't great, closed higher than the open, decent seasonality, not a whole lot to say there. If we look at the diamonds, I think I'm going to sound like a broken record, but let's look at the diamonds. Two dojis in a row, a little bit further down below the 50 than their others, up just a nominal amount. Again, is this broken down? Yeah, it broke below the 50, but it looks like it's consolidating here. And dojis after a fall like this, our indecision can often be a predecessor to a market that's going to rebound. High jump is not low enough to be considered anything meaningful. It's still above zero. If we look at the Russell, this is probably the weak sister of the U.S. markets right now. And you could see a much deeper fall below the 50. This was all-time highs, and it's important to remember we hit all-time highs, frankly, a little bit over a month ago. And you could see a rally attempt here, but it failed, closed lower than the open, and the Russell was actually kind of flat on the day. Seasonality still is your friend right now. So the U.S. markets all look about the same. They've broken the 50, but they seem to be consolidating underneath. And maybe the acuteness of the drop has relieved and maybe they go higher. Here's a negative picture. Look at where the VIX is. VIX potentially has a ways to go before it's problematic. And you look for shoots up like this, and even like what we saw here to show a market reversal. This isn't much of a move. And if you want to be concerned, the VIX actually closed much off its low. Elevated VIX still is concerning. But as the words of George Lee, when the VIX is high, it's time to buy. When the VIX is low, look out below. I don't like it when the VIX is rising, but when the VIX is high and starts to fall is a good time to buy. I'm not sure we're there yet, but I think that NVIDIA earnings are going to upend a lot of my traditional technical analysis approaches. Hope so. Hope we get a great day today. You could see that the dollar's well off the high, but it's stepping up, and clearly you're getting higher highs and higher lows. We'll see if this one takes it out. High dollar is not great for the U.S. markets. Might be good for some things. We are still massively off the lows, so I don't think the dollar is going to cause a whole lot of pressure here, but certainly something to be watching. If we look at commodities, as dollar goes up, um, does that mean the gold and silver are going to have problems? You can see both gold and silver are consolidating after all-time highs. Silver, it was an all-time high, but wow, many years to get there. 0.16 up on gold. Silver was up 0.76. But to me, they're just consolidating here above the 50. Oil is troubled, can't get above the 50 or 200. Natural gas is in a bit of a new uptrend, which is why we took a position in Expand Energy, which is the old Chesapeake. Looking at rates, which are something that I like to follow, 10-year was up 0.05. I almost call that flat. And the 30-year here was up 0.08. So rates are consolidating here off of the recent highs and off of that 5% level. Buckets show me that the markets relaxed some of their oversoldness that we saw the prior session. Still have a number of stocks, the white bars, so you got 12% of the NYSE is below their Bollinger Bands, 13% of the NASDAQ, 12% of the S&P 1500, and 11% of the Russell. So you still have a healthy part of the market that is oversold. And look at the lack of stocks above the middle of the Bollinger Bands and higher. So clearly a market that's been selling off for some time. Market breadth, not going to see a lot of new stuff. Let's get to the right day. You can see that the NYSE looks a lot like the Russell. It's had a pretty big fall. A doji bar here, maybe it's consolidating to go higher. And the NASDAQ composite, like the Qs, is just below the 50. Now, if you look at stocks above the 200-day moving average, the 50 in white and the 20 in green, still trending down. And again, the breadth today was not good. And if we were to see the markets rally and be sustainable, you'd like to see those turn up. New high, new lows, we know they're negative. The AD lines on both are negative, and the up-down volume. Here's that cluster of Hindenburg omens we saw. And you can rally before you fall. And I have to keep that in the back of my mind that a Hindi signal only 25% of the time is going to show a significant market sell-off, which means that 75% of the time the market doesn't fall much. But there hasn't been a major market fall without a Hindenburg omen, and that's something I don't forget. If we look at the deeper market breadth tool, some things are interesting. We are low, but not at obvious reversal levels on the 13-week new high, new low, 0.17 on the S&P 500, 0.13 on the NASDAQ composite, 0.15 on the Russell 2000, and 0.12 the S&P 1500. We certainly could bounce from here. But if you go back and look at what did April 7th look like when I made my bottom call, you could see it was at in the range of 0.05. There was a 0.01 day as well. So you can get more oversold. You can see we're off the bottom here, but we are in an area that we typically reverse from. So if you're bullish and you're looking for a reason to be bullish, some of these indicators on the breadth are supportive that we've gotten too far oversold. If I want to make it about, well, we're having positive divergence and the AD lines have turned up and the RSI is at a clear buy position. They're not. The RSIs have turned up, but from the 40s. The AD lines continue to fall with the markets across each of these four. If I look at ratio charts to get a sense of where the action is, well, what's in a nice uptrend? One thing, healthcare, and then maybe staples increase some, but still low in its in its history here, a recent history. Utilities and real estate look similar. The defensive things showing some strength. Look at how bad discretionary has done. But it's energy, it's healthcare, and I'm sure we're going to see tech pick up this week. I can tell you if I look at the sector timing model, this is something I recently put together, which is, of course, Bitcoin in the upper left-hand corner, and then the rest are the indexes for the S&P 500 sectors. and the only one that's in a buy signal is healthcare in the lower right. And did we lose energy? We lost energy. Nope, energy is still in a buy signal as well. Everything else is in a sell. So that's where the strength is right now. If we go into my JAS layout, 3,764 stocks passed my screen of $1 and 100,000 shares in the NASDAQ, NYSE, and the Amex. And if we look at each one of these, you'll see, I don't want Bitcoin, but every stock in here is going to have a sector and an industry group. So when I go into my top-down view, I'm looking at a top-down view on those 3764. I could do a top-down analysis on just the S&P 1500, and it should ultimately change back to the 1500, but let me stay in my base, which is the larger market of stocks. And let's look at percentage return on Wednesday. And the leaders were utilities, excuse me, tech, and basic materials. These are the industry groups in those top performing sectors. And if we look at percentage return, renewables, industrials, power, copper, semi-communication, gold, construction, aluminum, and then internet content and information. Several of these could be construed as supporting the data center. Oh, I didn't just do that. Let me try that again. That was a delayed reaction from going to the S&P 500. Okay, say some of these like renewables, independent power producers, semiconductors, excuse me, industrial materials, copper, communication equipment, could all be part of the complex that supports data centers. So 258 stocks are in those top 10 industries in the top three sectors. And then if I cut them, make sure they're above $5 and 500,000 shares, I'm left with 158. Let's pull back an uptrend filter in. Gives me a lot of stocks that are not in uptrends anymore. We're down to 27. Let's look at up down. All right, impulses. Let's just look at a couple of these. SGML. Sigma Lithium, no surprise that it's a lithium. Lithium has been moving. Nice breakout here. Um, it looks extended from the base, but it's just a bit over the 200. It's a small lithium provider. I think gold has more room to run, and this is Sibanye Stillwater, gold, silver, other precious metals. Um, that looks okay. Next, I have no idea what that is. Basic materials. Now I can always come up here and say, when are earnings? Earnings are not to February. Does it make money? It's got revenue. Does it make much money? Does it pay a dividend? If it does, it's teeny weeny, 1.33%. And then I click over here, the far left. It gives me um, a story of what's going on, what these companies do. And these are, you can read their earnings, as their earnings reports, etc. Don't know anything about the stock. Certainly coming out of a downtrend and breaking out above the 200. Light LEDs, I believe, nice pullback and an uptrend and a breakup. Boy, that one's not in a bear market, is it? Earnings came out. Look at the growth rate. You want to know why this stock is doing well? 511%, 1366, 9631 on a multiple of 50. Revenue is growing. Something very good has happened to Light. And even though it is expensive and probably getting close to extended, it's not yet. Boy, look at that earnings per share growth. DRD, Dr. Gold, again, same thing as the SBSW. I think gold is going to run again. WRN. So when doing it this way, you're going to often find stocks you've never heard of before, and stocks that may be extended because we're looking for things that have been leaders. VZLA, another basic materials. Does that mean gold? If you click on the fundamentals, there's nothing there, so it's not going to help you. You can look at the news, something about silver production deficit. So this is a gold and silver play. Certainly can read those at your heart's content. So I always start this way, and I might find new names that I don't recognize. I might find things that are not extended that are setting up. And as a top-down trader, this is where I start. And where it's really been helpful, as you know, we've had a run in biotech, which notice isn't on the top list today. This is where those names started showing up, some of those small biotech stocks that have had great runs. And when they start showing up and you start to see what we call a wolf pack of them, it helps you pay attention. Now, sometimes I just don't want to do top down. And not that there's anything wrong with top down, but I think it's sexier, although maybe less effective, to do bottoms up. So bottoms up, I want to go back to that full 3,764. And to make my life easy, I created two scans. And these are my go-to scans. A plus scan doesn't usually get a lot of action. And it requires, let me just look at Upwork. It requires the stock to have two momentum dots in a row. And those are the first set of blue dots right here. And the green dots represent we just came out of a squeeze. That's not required. This here shows the relative strength of the the stock, Upwork versus the spider. The stock's outperforming. Good volume. We broke above the 50. We're not extended. This one looks interesting, Upwork, and what drove me to it is those double momentums and this relative strength pattern. LTM sounds like a lithium name. Nope, Latin Airlines. Ooh, I love beautiful chart. How we haven't seen great patterns, but boy, beautiful uptrend, a pullback, sort of a cup. Handle's too low for this to be a handle. Be a weird cup, but breaking out over the 50, double momentum from a squeeze, great relative strength in OBV. I like that. What about earnings? And if you didn't know what this company did, look at the earnings per share. Do you notice a trend here? The stocks that have held up are the ones that are making money with good earnings per share growth. So 11.14, which was last week, I don't have the comparator, but it did have a surprise. And we're going to be looking at $1.33 versus 90 cents. That's almost a 50% growth rate if they don't have a surprise, which they often do. So if you want to own an airline, LTM looks quite good. And then Exact Sciences, this is a diagnostic, sort of in the same world as Tempus, Garden Health, Caris Health, Foundation One, which got bought by Genentech years ago, now Roche. What a big move on Exact Sciences, but this is a acquisition target. So I don't know how you would play this. You'd have to figure out what they might be offering and what the premium is. Um, Once the market knows there's an acquisition coming, because there was a offer that came in by Abbott weighing a takeover, the market will run. It's always discounted. It's discounted if there's question of whether it will happen. And sometimes the offer comes in between the current price and where it was when the market ran. So there's no guarantees there, but that's why Exact Science ran. The other of my go-to bottoms up scans is more of my traditional pullbacks and uptrends with momentum scans, and that's the A scan. And I run that. This usually gives me more. Let's just look very quickly. Applied Materials, an old good name on the semiconductor manufacturing front. So you could see a flag here. Don't like this bar, but it didn't close bad. That was a strange bar. Is that earnings date? Yep. And their earnings, they slowed growth, and that's probably why it sold off. But we're breaking out of a flag here. AMTM, Momentum Holdings Industrial. This must be an earnings move. 11.25 are earnings. Let's look over here and see if earnings came early. No, so new multi-billion pound framework to deliver expert decommissioning solutions for the Sellafield nuclear site in the United Kingdom. So I guess it's getting paid to turn off a nuclear reactor and clean up a nuclear reactor site. Don't know anything about the space, but that's obviously a big move and one that looks interesting. So what drove it? We've got a pullback in an uptrend. So when you look out at the weekly chart, we better see an uptrend. And we do. It's an IPO. You notice that as well. Back to the daily. It requires a momentum or a breakout signal, and I've got both. It requires a squeeze or coming out of the squeeze. I've got that. And look at the relative strength in the OBB. So it meets all the criteria I'm looking at. AMTM. FDMT, who is this? 4D Molecular Therapeutics. So it's a healthcare. I don't know what they do. So I just go description, put over the name, and what does it say? Clinical stage gene therapy development product candidate. Da, 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 da. I'm not a giant fan of gene therapy to date, but it offers a lot of promise in the future. The challenge is who pays for it, because we're talking about products that are millions of dollars per patient at one sitting, and might provide value for 40 years. So it's great for society. But if you're the current payer and your people change insurance companies every 2 to 3 years, how do you justify that? So here you see a potential flag breakout. It hasn't broken out yet. NVFY, again, another name I don't know. Nova Lifestyle, consumer cyclical, not long enough to give me fundamentals. And what does it say here? Nova Lifestyle, innovative designer and marketer of contemporary style furniture. Public offering shares of common stock back 0904. Um, don't know too much to say about this company. Next one, PAGS. This was one of the ones I thought was going to run last year when the markets came out in the April bottom, and it really didn't do much. Kind of sideways mover to me. SEMR, SEMrush Holdings. Something happened here. The question is this a split or is this a big move? So we look here, no earnings came out. The news, acquisition. So done. We're not going to look any further. SGBX, Safe and Green Holdings. Again, this is one to me that I'd like to do research on and see what caused this gap up, if that's real, and what does the company do. Moving facilities, IBN, diversified holding company and delivering innovative solutions across infrastructure, construction, energy, healthcare, and environment. Probably has some work in the data center space. Um, Something about litigation here, so I'd want to read all that. Something happened here big in September that caused it to gap up. Reverse split 1 to 64. I don't buy reverse splits. Sorry about spending so much time on it. And that's why you got to look at the news. And lastly, Upwork, which we looked at before, I think looks good, made both of the filters. So if I wanted to enter new long positions and it's not buying NVIDIA or direct benefits of data centers, I think Upwork looks interesting. Have an awesome day. I hope to do something over the weekend. It depends if what the time frame is. I'm at an Indian wedding, which means nonstop partying, drinking, eating, and we'll see if I have time to get a video in. You all have a great day. Let's see how that triple play works out for NVIDIA.